You should know that, trading boom and crash indices, relies on technical analysis, price action and the use of indicators as well, right? And for you to be able to trade, this type of market, you need to be, so familiar and understand this market successfully. Okay, you need to be trading this market, practicing this market so that you'll be able to know when the market would buy and when the market would sell. Okay, it's not that difficult to understand when the market wants to buy or sell. Okay, so you need to be a professional, for you to be able to know this accurately. All right, so in this video, guys, I'm going to share with you a strategy that you can use to trade crash 500 index, successfully. So this strategy, is a very good strategy, and you're going to, understand it, in the way that I'm going to explain it to you guys. Now, with this strategy, all right, we're going to be using, three indicators, which is the relative stress index, the money flow index, and the bulls power. Okay, the bulls power indicator. All right, now we're going to put on the first indicator, which is the RSI. I'm going to put that on indicator window 1. We're going to put in the relative strength index. We'll set that period on 14. You apply to close, the level, put on level 90 at level of 10, style on 4 pixels with the color black. Then the style right here, you put the color on white and on 1 pixel. You click on done. The second indicator is going to be the money flow index. All right, on the indicator window 1 as well. You will look for the money flow index right here. Period 14, the volume is thick, the levels on 20, 80, then the style 1 pixel with the color white, style right here on 2 pixels, the color green. Okay, then you click on done. Then the third indicator which we are going to use is the bulls power. We'll put that on indicator window 1 as well. The bulls power indicator right here, period 13, then you put it on 2 pixels. You put the color blue or any color of your choice, as long as you understand what you are doing on the market. So I said in the beginning of this video that we're going to be using 3 indicators, right? But we're going to use the MACD as well, just to confirm our entries. Okay, we're going to use the MACD as well, but I'm not going to add the MACD into this trading analysis right now. I'm going to add it later on in the video, just to confirm setting entry positions for you guys. Okay, all right, let's get on with this strategy. Now we can see that this blue line right here is the bulls power, and this green line here is the money flow index, and this black line right here is the relative strength index indicator right now. So how do you trade this market using these perfect good indicators, these 3 indicators? Now, the first thing, remember that I said for you to be able to trade this market successfully, you need to understand, the technical. You need to understand technical analysis, price action strategy. So first of all, what we're going to do is to observe the market using technical analysis. So we're going to the higher time frame, the 1 hour time frame, just to confirm a good entry position. All right, we have seen the market right here. The market is at the overbought. Okay, so this means that this market is a sell market. This market is going to sell, right? So we just know that we have gotten the market to sell, but this doesn't mean that the market will not buy, right? So that's our advantage. We need to scalp this market, because we that are trading the boom and crash market, basically this is a crash market, right? We don't usually have that patience to wait until the market start going in a downward trend, right? Even when the market start going on the downward trend, the market will sell, it will buy, it will sell, it will buy, but it's going to follow that same pattern as well, right? So now we have confirmed this good entry, that this market is a sell market. So we're going to the 1 minute time frame to scalp this market successfully. On the 1 minute time frame, this market has bought right now to this point. All right, so we're not going to buy this market, we're going to look for a sell entry. But what we're going to do right here is that this strategy is only for buys, taking buy position. But if you understand what you are doing on the market, if you understand what you are doing on the market, you can look for a possible sell entry at this point. But this strategy that I'm about to share with you right now is not to catch spike, but for you to see a possible buy entry for 5 candle to 10 candle ticks. All right, okay. So what we're seeing right here is that This market right here is buying right now, but it will sell. Okay, so this strategy, we're seeing a shape line right here, a V-shaped line right here. So all we're going to be taking our buys is inside this V-shaped line right here. Okay, this V-shape. Now first and foremost, we're going to confirm, all right, we're going to confirm 2 to 3 spike before we're taking our buys. All right, we're going to confirm 2 to 3 spikes before we're confirming our buys. Now if you take a look at this point right here, there was a spike, and if you trace it upwards, downwards, you will see that the spike happened towards the upward trends of the boost power. All right, the boost power. Remember that this green line is the money flow index. So this blue line right here, remember that this green line is the money flow index, and the blue is the boost power. Now the boost power towards the upward trend right here, the first spike came through into the market. All right, but when the second spike came into the market, it was also at the upward trend of the boost power. So you do not take an entry during this point. You wait until the second spike. Remember I said 2 to 3 spikes. Okay, now you wait until the second spikes right here. This is the second spike inside the V-shaped line. So it's a good entry point for you to place your buy. You take 5 candlesticks, or you can place your buy and wait until the price of this boost power have gotten to the money flow index. Then you exit from that point when the money flow index have touched the this green line of the money flow index. When the boost power have touched this green line of the money flow index. Now there are 3 spikes you can wait for. You can also wait for 2. All right, now the reason I said that you should wait for 3 spikes, right, is that first of all, we see here that this spike came through towards the upward trend of the boost power. There was supposed to be a second spike towards the downward trends of the boost power. That's when we are going to take a buy after the second spike. But we saw a third spike. But this spike that came into this market came in again on the upward trend of the boost power. All right, the boost power. So the third spike that came through into the market was inside the money flow index line, but it was towards the downward trend. So now we'll now assume here as the first line of the spike, and here at the second line of the spike inside the green line of the V shape. I hope you understand what I'm saying. Please let me make it easy for you guys. The first spike that was supposed to come into the market, it was supposed to be 2 spikes, but sometimes there may be an instance whereby you will need to wait until the third spike. All right, we all see that this line right here, this spike line is inside this V shape. All right, all the spike that came through 1, 2, 3 are inside this V shape. All right, so they came into this V shape line right here, and we saw that it was supposed to be a 2 spikes. After 2 spikes, then we enter into the market for a buy inside the V-shaped line. But we saw that the second spike that came into the market came in above, which is the upward trend of the boost power. So that means that we need to wait again for another spike. Let me show you. You can see this is the first spike upwards. There was supposed to be another spike toward the downward trend, but the green line went downwards, and the third spike came in at this point right here. The second spike came in at this point. Then the third spike came in at this point towards the downward trend. So what we're going to be looking for is a spike towards the downward trend before we place a buy. All right, take a look at this point here. This first spike came in at this point. The second spike came in at this point right here. All right, then you place your buy because it's in the V-shaped line right here. There was supposed to be a third spike, but the third spike did not come into the market. All right, and if we take a look at this point right here, we can see that price is at the overbought, which means that there is a higher possibility that the market would spike all the time. All right, so if you want to place a buy at this point, you want to scalp the market quickly. So now this is a point whereby we invite the MACD into the market so that we can avoid, because we know that all strategies are not 100%. So thereby, there may be an instance whereby we're expecting the spike not to come, but the spike may come in. So that's why we're using the MACD to make sure that our strategy is accurate. So now we'll put in the MACD indicator in the indicator window 1 right here. Got it set up: fast EMA 14, slow EMA 24, MACD SMA on 10. The main color black, red color, then the signal red on all 4 pixels. Then you click on done. All right, now take a look here. So if you zoom upward like this point, you can see that there was a spike all through this point. From here, it started from this point to here, right? And all the spike happened towards the downward trend. And we know that towards the downward trend of the MACD, there's a lot of spike. But since we're scalping the market, we shouldn't, worry too much about the spikes and the MACD towards the downward trend. So we're looking for a possible buy entry. Probably want to scalp about 5 candlesticks and exit the market, because mostly on the crash market, we mostly scalp the market. All right, so we zoom in a little bit and we'll confirm a good entry for a buy. Now, remember that we're looking for, 2 spikes to come into the market before the 3rd spikes. Now, this is a V-shaped line towards the downward trend. The first spike that came into the market was towards the upward trend here. The market went down below, but the second spike didn't come in. It came in again towards the upward trend of the boost power right here. So there was supposed to be a 3rd spike before we enter into this market, which is the 3rd spike is supposed to lead the boost power towards the downward trend. But the spike didn't come in. Although we experienced that this spike that came in at this point was also towards the downward trend of the MACD and towards the upward trend of the boost power. So it's safe to say for us to place a buy and scalp just 5 candlesticks from the market. All right, but this can also go wrong because the market is at the overbought, and also at the overbought level there was a lot of spike on the market, but we just confirmed the first spike towards the downward trend of the MACD. So it's a a good entry position for you to place a buy and scalp just 5 candlesticks from this market. All right, take a look at this point right here. This is the V-shaped line. All right, the first spike that came into this market towards the upward trend of the boost power. This is the green, the blue line here. The second spike came into the market towards the downward trend of the boost power and towards the downward trend of the MACD. So you can place a buy, take 5 candlesticks, then you exit, or you can wait until the price of the boost power get to the green line of the money flow index before you exit the market. And if you zoom out, you can see that the market is at this point right here. So there's no higher volatility during this point. So the chances of the market to continue to spike at this point is a bit low. So that's why you can place 5 candlesticks or even wait after 10 candlesticks, then you take your profits. But at this point right here, the chance of the spike coming to the market is very high. All right, so I believe that after watching this video, you understand how to trade Crash 500 index using this strategy that I've shared with you. And if you have anything you want to say on the comment section, if you don't understand what I've said, you can drop a comment down below on the comment section. I'm gonna get back to you. All right, so if you found value in this video, do it to like and subscribe to the channel, The Daily Forex, for some trading tips and strategies, and also join our Telegram community whereby we share free signals and also tips and strategies on how to trade. I will see you guys on the next video.